In this video, I want to take a look at oil. My original expectation was that oil would probably drop a little deeper, maybe below $42 because of the left translated pattern that was playing out here. But I think I'm going to be wrong on that. It looks to me like oil has probably completed its intermediate cycle low here. There's another pattern here in play that kind of makes me think the same thing. It's called a coil. And you can see here we had week after week in the oil market where price pretty much closed at about the same level that it started the week. That kind of pattern is called a volatility coil. And generally, about 70 to 75% of the time, when price decides to move out of the coil, it does so very aggressively, but most of the time the initial move turns out to be a false move, and then price soon reverses and delivers a much more durable move in the opposite direction. So we've got a clear coil pattern that developed here over the first 2 months of the year in oil, and then the coil broke to the downside, which would be expected as it needed to move down into its yearly cycle low. As you can see, the yearly cycle low last year occurred in February, so I was looking for it sometime in the spring of this year as well, and it looks like it occurred in March here. So we've got the breakdown of the coil, a violent move in the downward direction that stalled out in about 3 weeks here, and then now it looks like it's reversing and moving back in the other direction, which is generally how these coil patterns play out most of the time. And so if I widen this chart out a bit, and assuming this is a yearly cycle low here, then there's a couple of potential targets for this intermediate cycle to rally to. One obviously would be this $60 to maybe $63 range here. That would be a resistance zone. Depending on how long it gets there, the 200-week moving average might be at about that level, say maybe in May or June. So my thought is that we probably did see the yearly cycle low here. I'm probably wrong. We're probably not going to get another leg down that drops below $42. I've kind of given up on that scenario, and this is exactly why I almost never sell short. It's just it's hard to pick the exact bottom, and if you don't get out quickly enough, then you end up giving back all of your gains, which is exactly what's happened here. If you were short oil, if you held on looking for another leg down over the last 2 weeks, you've probably lost all of your gains on the short side. It's just too hard to make money on the short side, in my opinion, so I just don't waste time trying to do it. So anyway, potential target, assuming that this is the larger intermediate and probably yearly cycle low, would be somewhere around this 60 to 62, 63 level, roughly where I would look for this 200-week moving average to intersect with that resistance zone here in a month or two. And in keeping with my preference for buying when the weekly stochastics at least get oversold, you can see the drop into this cycle low did manage to push the weekly stochastics to oversold on oil. So that also signals this as a potential buying opportunity. And we've got that same oversold condition here in the energy stocks. So while I know that many people are gold bugs, they're very stubborn in their views, they're very one-sided in their trading. If you are set on trading commodity markets, if you're just dead set against participating in what I think is probably the euphoria phase of the stock market that's coming up over the next year or so. If you refuse to make money off of that, I think probably the best spot, at least maybe for the next couple of months anyway, if you want to trade the commodity markets, is probably in the energy stocks. You can see here the energy stocks after that rally out of the this was the 7-year cycle low in the stock market, and also the 3-year cycle low in the CRB. The energy stocks had a very nice run, came right up and traded right into this resistance zone between 77 and $80 on the XLE. And then we've got an extended 3-month correction, almost 4-month correction. But I think the sector that's probably set up to deliver better returns right now is the energy sector. Over the next 2 or 3 months, I would think the XLE should at least come up and test this resistance zone again, and I would think it would break through at this time, and maybe we go up to this next resistance zone around 82.50 over the next 2 or 3 months. So if you're single-minded in your desire to only trade the commodity sector, I think energy might be your best bet for the next 2 or 3 months, as opposed to mining stocks. I think the metals just need to rest for a while, and we'll come back to them maybe later in the summer. That's usually when the gold tends to put in its intermediate cycle low, is usually in May or June.